Going to move back to other news now. Going to bring in our business editor, Charles Pellegrin, who's with me. He's beginning with the stock market sell-off that we've been seeing in the United States, aren't you, Charles?
On Monday night, the three major averages on Wall Street fell significantly after President Donald Trump renewed his attacks on the head of the U.S. Federal Reserve, Jerome Powell, urging him to enact what he said were preemptive cuts in interest rates and saying the head of the U.S. Central Bank was, quote, a major loser. This follows previous statements last week where Donald Trump said Powell should be fired and where his administration confirmed they were studying whether they could actually legally pull such a move. As a reminder, the Fed is supposed to be an independent institution that does not respond to political pressure. So this attack on the Fed's independence has rattled investor confidence in what used to be the safe haven assets internationally. So for instance, the US dollar, which has now hit multi-year lows against other major currencies. The British pound, for instance, has hit its highest level against the US dollar since September 30th. And similarly, US bonds, so investments in US treasuries, are also being hurt. It's now becoming more expensive for the US government to pay back bondholders as investors believe that lending money to the US government is becoming a riskier bet on account of that threat to the Fed's independence. Inversely, gold is becoming the new safe haven asset. It hit a new record high of over $3,500 per ounce. Let's listen into one Wall Street investor's sentiment.
If politics starts getting into monetary policy, you now, as a foreign investor, even a U.S. domestic investor, can't necessarily trust that your interest as a bondholder will be respected. And so that's a potential risk for the dollar and a potential risk for interest rates. All of this feeds into fears within the stock market as well, because everything levers off of the U.S. Treasury.
Well, in Europe at the open, trading resuming after the long Easter break. It's either flat or trading in negative territory, as you can see there. The DAX in Frankfurt down 0.25% lower.
So what then, Charles, is the US Federal Reserve's role exactly? What are its objectives, if you like?
Well, the U.S. Federal Reserve is the U.S.'s central bank. They're in charge of monetary policy, so basically in charge of how much money to inject into the U.S. economy. And its most important lever is setting the basic interest rate, which will then affect interest rates that all run through the economy. So any loans that private banks can provide, whether it's for a private sector investment or a mortgage for a home. They have two considerations, as you can see there, when setting those interest rates. First off, ensuring low and stable inflation, so making sure prices increase steadily at 2% year on year. And secondly, working towards ensuring maximum employment, so ensuring that anyone who wants to find a job can find such a job in a timely manner. That mandate generally doesn't fit neatly with political priorities because it requires taking measures that could be unpopular. Raising interest rates is rarely a popular move because it makes financing more expensive, but it's often what's necessary to bring inflation down. Donald Trump is calling for those interest rates to be cut now, although U.S. inflation is predicted to hit 2.3% in March, so close to the objective. Jerome Powell has said he wants to wait a bit longer before cutting rates to see if this inflation stays at those levels because the specter of Trump's tariffs is looming large over prices, threatening to drive them up. Some observers are saying that Trump is basically getting ready to blame the Fed for the economic downturn the U.S. could soon be facing because of the chaos brought on by his policies.
Charles, thanks very much. Charles Pellegrin, our business editor, following all of that for us here on France 24.